When you look at the U.S.-China trade war, does it escalate from here? We're none the wiser on when the talks actually will take place and if they take place in September.
I think, unfortunately, the risks of China just spinning things along at this stage and waiting for a more benign or perhaps less volatile U.S. administration, that risk seems to be rising at this stage. That means it's really, if we're looking for a trade deal, it's probably going to come from some capitulation on the U.S. side. Most of that would happen behind the scenes, but there would have to be some kind of a rollback of the tariffs that have been put in place already. That's clear from the Chinese side is definitely wanting that. But from the Chinese side, the economy is weak. Yes, admittedly, the economy is weak, but we think that they're still looking to the stimulus coming through, waiting for the effects of that stimulus coming through, and really that's in the pipeline. So they probably are expecting not a massive recovery by any means, but for the economy to be stabilizing around the end of the year and starting to recover into the beginning of next year. And for them to lock in what they see as perhaps a subpar deal at this stage, rather than just wait it out, would be perhaps not very far-sighted of them. So the fact that stimulus probably will be coming through is a factor pointing towards the Chinese just waiting. I'm not writing off a trade deal completely, because I think Mr. Trump will be facing a lot of pushback from his own party against consumer goods. Tariffs on consumer goods. We've seen that with the U-turn that he did on tariffs against Mexico, and also by the delay of the tariffs that were supposed to come into effect, or the full range of tariffs on consumer goods that were supposed to come into effect on September, to take account of, quote, the holiday season, to take account of Christmas shopping. So we can't write off a deal yet, but it's looking from the Chinese side as though they're willing to just spin that out a bit more.
Christian, how do you view all of this? How does this tit for tat and tariffs actually leave the actual trade talks?
It sounds very plausible. The likelihood that a deal will be struck this year seems to be waning, because the US is escalating and China isn't moving enough. So we think the elections next year, US elections next year, are really probably a necessary threshold to then get to some sort of deal, perhaps afterwards or shortly around that election. From a European perspective, of course, that's not good news. We've already experienced a lot of collateral damage from the US-China trade war. China is the most important trade partner for many European countries, including Germany. The Chinese slowdown, which is partly caused by the trade wars, but of course also by the Chinese rebalancing, which is a broader underlying story, is one of the sources of the downturn that we've had, and which has brought us to near recession, I guess, in Germany.
Freya, when you look at the months ahead, where do you see signs that the U.S.-China trade developments are weighing on data? What data points do you think will be a good indicator?
The key indicator that I look at for the economy overall as a leading indicator is monetary conditions, and how tight are monetary conditions, because this is a very banking-centric economy. So if there's not enough cash floating around in the economy, then there's not enough liquidity for people to go out there and spend. At the moment, liquidity conditions are too tight still for a recovery, and I think the trade wars have fed into that, because this time around the PBOC is relying much more on the private sector to go out there and borrow, and in the face of trade wars and producer prices in deflation, that's not a great prospect. If you're a private firm and you're actually market orientated as opposed to as a state-owned firm, which is where they've relied on in the past to try to stimulate the economy. So the uncertainty generated by the trade wars has fed into already tight monetary conditions on the back of the tightening, perhaps the excessive tightening that they undertook in the years before the beginning of last year. So to see where the recovery might come through, we're really waiting for that turnaround in monetary conditions to take hold. We've seen the beginnings of green shoots, but it has just come up again against this the tariffs being hiked and the on again, off again trade deal, trade truce, or trade wars. So we're waiting for those monetary conditions to improve in a sustained way. The PMIs, of course, are some of the shorter term indicators of coincident growth. At the moment, we still see those shows in a downtrend. The data that was released over the weekend and this morning, even with that uptick in the Caixin PMI, they're still broadly in that downwards channel. So we're looking for the authorities, the PBOC and the fiscal authorities, to be making some adjustments to try to boost the stimulus a little bit more. But it's really to do with adjustments on top of the stimulus that they've already done, and they think that stimulus is in the pipeline and the recovery is on track.